Hey, what's going on? My name is Josh. For those of you who don't know who we are the Good Brothers Trading Academy, and we teach others how to trade in the stock market. Now, something tells me that the Fed also knows how to read these charts. Okay, we're just going to touch on the SPY, Qs, and IWM real quick. We just want to go back over our levels. So if you remember right, this was our 50% on the monthly time frame, and we want to be aware of this level. Now, we also have the pink level. That would be the 50% on the weekly chart. Okay, so what did we see yesterday? What happened? We were waiting to find some bottoms. We said this, and I'll post this YouTube video. We talked about how this 323 and 320 level would find buyers in the market. Okay, this is where we expected other buyers to come in, and that's what we found. Now, what we want to look at is we wanted to see how it was going to react around these levels. We were not bullish until if we fell beneath this 323 and 320 level, we were actually bearish on the market. Now, it doesn't mean it's not going to reject, but now we're around these important levels, and now we can figure out which way the market is going. So looking and watching on the smaller time frames, maybe the hourly chart or the 30-minute time frame is going to tell us where buying pressure is coming in. So we're going to want to see tail candles coming off there, or maybe we get a real strong push up first thing and it ends up with like some sort of an exhaustion bar or a very bullish bar on a bigger time frame. We can now be looking at buying some of the dips down below and then selling the rips. Okay, so what we're doing is we found the buyers come in. Let's look at the smaller time frame and see what it looks like. So we have this well, potentially almost like a Head and Shoulders, right? So I hate kind of using specific names like that, but then it is what it is. So all the retail traders, they also see these patterns. That's where they come up with the Head and Shoulders, et cetera, et cetera. But what I see is the Fed also sees that this is a buy zone. The way I see that is look at the strong buying pressure coming off. So we not only came down just short of this area, pushed up, we rejected that very important 50% level. We came back down and we held, okay? And now what we also did yesterday is we made the higher low that we were talking about that it could possibly make. And this is what we were wanting to see. Not only does it make the higher low, but now we gapped above because this was resistance. If resistance is too hard to get over, we will gap above it generally. Or if the support is too heavy or too solid of a support, in many cases, the market will open up beneath or above those critical levels. So there is no coincidences in the market. It doesn't matter if it's by a penny or a couple of a couple dollars. The thing is when we open up above a level like this, this is what I'll be paying attention to. Now, if we crash right through it, it is what it is. The market can do whatever it wants. But what I see is that the Fed does not want the market to crash at this point. They're going to continue to add stimulus or continue to buy the market up to maybe it's through the election or maybe after the election it continues as well. But we just want to understand our levels. We're not biased crazy on the short side or crazy on the bullish side. All we want to do is understand where the levels are at, and now we have something. We're right around this area. If we blast through it and we start getting rejections and it curves around something like this, let's say it comes straight down, and then we start getting wicks coming off of this, something like this, and it rolls around and breaks down. Okay, so then we could be getting short probably around this area, which would be the 50% up the reversal candle. That's where I see where these bullish people right here that got very bullish on the market, this is where they're going to be selling their position. Okay, now I wouldn't necessarily be shorting this. I would be waiting for a rejection probably to come off at this point, because that's where I see the real fear in the market coming around. Okay, that just gives you an idea of what could possibly come out. What I would like to see, because we don't want the economy to crash now, or the stock market to crash, but what I'd like to see is maybe a push up or maybe some selling, fill the gap below, and then we start getting some wicks and these stronger candles. I would love for it to go sideways for maybe an hour or two and then be bullish, filling the gap window, right, or the gap, and then maybe be bullish up until this area. And the reason why I say that is because this is where it got curved around. We can read the chart right here before the failure. Okay, we came down, we got this strong tail candle right here, making a push up. We gapped above it. It's very important. This level is very important. Now, we didn't look on the smaller time frames. We just measured it out on the larger time frames. We're seeing these gaps, ups and downs and stuff. So what we're talking about is this could be exactly what happens. It gapped up to here, but then fell, rejected, and came down. That's exactly the same schematic we were talking about down here. Okay, so let's go to a different time frame or a different chart. Let's go to the Qs. Now, I don't think we've broken down the Qs together, so let's give it a shot. Now, this was our buy zone. We found a double bottom in the Qs. Not only just a double bottom, but a very strong V-shaped recovery on the second. So it comes down and they just bought it, picked it straight back up. Okay, so we can see that there's some areas of sellers in here, in this area here, right? And then we have some clear sellers and we have some buyers in this area. Something like this. Whoa, okay. So right around there. Okay, so these would be the areas that I would be more out to be paying attention to. I like these areas. We're gonna sure use blue for the simplicity of the video. And we'd be watching these areas. Okay, and then there's clear sellers in here too. I just want to get an idea. Now we'll be watching the charts, be watching around these areas. It would be nice to see it come up, hold this zone up here into 273, and then make its move higher, right? It wouldn't surprise me to get a rejection and it find some more buyers into 270 as well. And if it doesn't and it starts curving around, these are the areas we could be paying attention to see what's happening. Now let's look at a bigger time frame. We hadn't done that on the Qs yet. So right now, what it looks like to me is we might be just building a pennant or a double top and then a rejection and a failure. Why I say that the Fed might know where the buyers come in at, they don't want it to fail under this 265 level. If it starts to fail underneath 262, 260, 265, around there, if we start getting daily closes or even 3-hour or hourly closes where we're getting rejections, that's not good for the market. And that's why I'm saying that they may be wanting to keep this up, keep it higher. Now look already, everybody that was short right here that did not cover their positions or did not find buyers, the market's gapped up already. All of these guys that held their position expecting it to continue further down are all underwater. That's going to give us two signs of buying pressure, right? Because they're going to be covering their positions on the open, which could continue driving the stock price up. But let's go ahead and just say what it is. The market goes down when there are more sellers. Okay, so if there's more sellers on the market open, it's going to crash. If there's more buyers, including people covering their position because they're underwater or they're losing money and they're hitting their stop losses, then that's going to cause more buying pressure. Okay, so depending on where we're at, but we can also look, the Qs have made one heck of a run, right? So if we look at the big overall picture, all we're doing is we could just be building energy on the clock, maybe building some type of a pennant pattern. All right, so if we draw in our fancy lines, we could get this pennant shape and then another explosion to the upside. Okay, so just paying attention. Now, if we get a failure, we again could be looking at going short, and we could break down that at a later time. Now, when we are looking at the IWM has been weak considering where the Qs is at and where the SPY. But that makes sense because a lot of these smaller companies, right, are maybe being more affected to the coronavirus and a few things like that. So they didn't have the recovery like tech did, where everybody's in their homes using the tech, everybody's going crazy with Zoom, you name it, Facebook advertising, etc., etc. Apple, everybody having to buy computers because they have to be at home. And let's face it, Apple is the best. Just joking. That's a joke. If you haven't already, smash the like button or get mad at me and tell me that Apple stink in the comments below. And then don't forget to share the video. Now, what we would like to see is if we get a stimulus, once Trump gets back in or Biden takes over, first and foremost, it's not until, even if Trump loses, he's still going to be remaining, he'll remain to be the president until January, right? Now, there will be some kind of stimulus. They've already been talking about it. I believe if there's a stimulus that I'm hoping, right, and what we're wanting to see is we'll want to pay attention to the IWM. These guys will probably see a nice benefit to this, and so we will be watching these areas, okay? And we have the tops being put in right here, so we definitely have some sellers into this area. These would be our... We definitely have some sellers right here. Okay, so anybody that was bullish expecting this to move up, I want to talk psychology real quick. So we went sideways right here. It moved up. And there were buyers in here, right? And then after it sold, as it comes back up, what happens is all these guys that were holding all the way through this, they actually start selling their positions because they're just breaking even in the account, okay? But there are also people that look... This looks like a bull flag, okay? And then we got the gap down, and anybody that didn't cut their losses and they were just hoping for the market to pick back up, they're still under money, water too, okay? So there's definitely people that are holding, saying that, well, over the long period of time, the stock market goes up at 8% a year, blah, 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 blah. So they just continue to hold. Now, there were obviously a lot of people that lost money as far as when the market was crashing. And now it's coming back up to this price where we will most likely find some more sellers in this area. And that's probably what we saw here. So as long as the sellers are out of the market, we find more buyers, or a stimulus package comes out where there will be spending more on these particular companies in the IWM, then we should see a nice move in the IWM. That's what I'm hoping for, and I'll be paying attention to these stocks in the sector. We could watch maybe a shift where we're getting money from getting dumped into tech, and we could see it possibly move over into some of these other companies or some of the other value companies that people like to pay attention to. Okay, so that's kind of the thought process for today, and I will wrap this up. I'll see you in the next video.